Good morning, this is Wayne Belisle. In today's Profit Maximizing Moment, we're going to talk about what you should do if the IRS sends you a memo saying, hey, you're underreporting income, all right? First of all, let me do a bit of job introducing myself. My name is Wayne Belisle. I'm a local CPA. Founded my firm back in 1991, so I've been working on my own for 28 years. Actually passed the CPA exam back in 1977, so I've been doing this a long time, really a long time. That was Tessie, by the way, who helped me in the intro. I need to hold her or she gets a little whiny. We really focus on three things. One, we focus on helping our business owners make more money and keep more of what they earn. That's what these videos are about. And I'm the founder of the Smart Profit Maximizing System, and we're in the process of writing our first book, which I think is going to be called Hidden Profits, but we're still working on the title. Second thing, tax planning. Man, we're going to be talking about a lot of that in the next 2 months, because that's really when we do it. In the last 2 months, we have a pretty good feel for how 2019 is going to come out and what kind of profits we're looking at. So we want to keep it and not send it to the IRS. In the last 3 years alone, we helped our clients save over $4.3 million. And the last thing, obviously, is tax returns. Still have a few stragglers from 2018, but more finally done. And obviously, 19 hasn't started yet. What are you going to do if you get that letter as a business owner? It says, hey, all your 1099s don't add up. You didn't get a lot of these, because most business owners are smart enough to know if it's been reported, we better report it. Plus, on top of that, keep good records. You're required to report all income no matter what. So if they're working with us, we're making sure they're reporting enough income. But one of the problems we run into is the new 1099K. It's not that new anymore. It's been around for probably 5-6 years, maybe longer. I haven't kept track. And what this is you get it from the credit card company. That's what the 1099K is. Credit card companies, PayPal, things like that. And it shows the amount of credit cards you ran. And the IRS has been mailing out notices to businesses it believes may have underreported cash. And it basically says, hey, you've underreported your cash. Your tax forms 1099K from merchant card and third-party network transactions show an unusually high proportion of gross receipts from card payments and other 1099K reportable transactions. And it'll say something like, your type of business consistently has a much lower portion of gross receipts from card payments and other Form 1099K reportable transactions, and a higher portion of gross receipts from other sources such as cash and checks. I don't know how they get this number, but it's basically assuming you're a liar. It's basically saying, you reported 100,000, you got 80,000 from 1099K. That's more than your type of business normally does. They know your type of business. You might be one of those that says, credit cards only. We don't take cash, we don't take checks. Who knows? It goes on to say, if you believe you filed your tax return correctly, please provide a written explanation telling us why the portion of your gross receipts from card payments and other 1099K reportable transactions may be higher than expected. I've seen one of these, and normally that's an unusual one, but we do get the ones where it's like, hey, you reported 100,000 and you ran $110,000 worth of credit cards. All of this is just kind of hocus pocus, and you probably, if you get one of these kind of letters, get with your tax preparer, find somebody, a CPA, tax attorney, somebody that knows what they're doing to answer it, that doesn't get you in trouble, all right? There's a lot of reasons why it wouldn't match, okay? A major problem with the 1099K matching program, it's not precise. The 1099K reports receipts for the calendar year, which causes a problem if you happen to be on a fiscal year, which means your year end is not December 31st. Another problem is it mismatches if a restaurant, for example, accepting credit cards, that includes the tip. Well, tip's not your income, it's the employee's income. So you're going to show less, but you're going to have higher credit cards. Cash back to customers that use a debit card, for example, grocery stores, other type of retail like that, where they can get cash back. Refunds to customers, more than one business sharing a credit card. You see that a lot at like salons, where the owner of the salon provides a credit card service, and the person doing the hair or the nails or whatever doesn't have their own because they're relatively just a startup, so they use theirs, and then they, parse out their, send out at the end of the week, end of the month, whatever that day, they give them the cash for that credit card transaction. It's obvious that this just isn't working that well. It's not doing a very good job at detecting fraud and underreporting like they thought it would, and it's creating a ton of problems and time for both the IRS and for you, the business owner. You need to make sure you understand what's going on. get with a tax preparer. One of the things I like to do if I have these things is I'll add them all up, report that top line, and then deduct out items like cashback, the things we just talked about, tips, that were reported. So when the computer goes to look for it, it sees the amount that somebody's reported to the IRS, but you're not taxed on it, and you give an explanation for why you reduce it. That's the thought. All right, get with somebody that knows how to handle these things. If you get one of these letters, I would highly recommend don't answer it yourself. It's simple as that. Get somebody who knows what they're doing to help you with it. All right, I'll be happy to. Hey, until next time, this is Wayne Blau saying let's make this our most profitable year ever. Thank you very much.